Let's talk first about Home Depot, because that's the big Dow component that has surprised the street today with numbers that were a little weaker than had been anticipated. What did you think?
Yeah, certainly it was a soft quarter. There were fewer adverse weather events in 2018 as compared to 2017, so that was a piece of it. But and the guidance was
because for somebody like a Home Depot, adverse weather events are good. They drive people into the stores to
exactly.
get the snowblowers.
Yeah, absolutely. And the guidance was weak. I think that's that with these the housing start data that's out today is also a negative. And
the guidance was for comp store sales of up 5%. That didn't seem particularly weak.
Yeah, 5%. But the EPS guidance was weaker than analysts' expectations.
Than analysts have been thinking on these
and
things, yeah.
I think also you sort of look at the 3.4 in the quarter and say, but they're going to do 5 next year, so it sort of requires a little bit of acceleration. I think when you normalize that out for weather, perhaps it's achievable, but certainly with the cracks in the housing market, it causes people pause.
I always try and figure out what down housing market means for a Home Depot. Because on the one side, if there's more construction taking place, that's a good thing, obviously, through the contractors. But if people are deciding to stay in the homes that they're in and not trade up, a lot of times they'll spend a little more. Home Depot has done okay with benefiting under both sides. You worry that that may not be the case?
Yeah, I think it cuts both ways. I think certainly in a strong economy, if the housing market is soft, then sure, you invest and you stay where you are. But I think the other piece of it is that the economy overall is soft, and so if consumers have concerns about the future, they may pull back.
Maybe not spending a big number on a renovation either.
Yeah, absolutely. I still think Home Depot is an excellent stock longer term. I think they reiterated their 2020 expectations, and the fact that they're investing while also holding operating margins in double-digit territory, while committing to 40% return on invested capital, those are really important things. And so I think it's a long-term winner, but today it will certainly suffer for these results.
What about Macy's? Is that a similar situation, or do you have longer-term concerns too?
Yeah.
Because the guidance was weak here.
Yeah, it's the opposite situation. I think Macy's long-term, there was a little bit of a head fake earlier this year, or sorry, in 2018 when we kind of thought maybe they've sorted some of their issues out. But I think longer-term, department stores as a sector are share losers, and Macy's specifically, is the biggest department store. I think they have invested in these 50 stores that they really believe are the growth engine of the company. But when you have 600 and you're investing in 50, they're also announcing today that they're cutting 100 jobs and sort of removing a layer of management. I just think you can't cut your way to prosperity.
Is there, if you look at your 50 stores, you're right, 50 out of 600 stores is not enough to be really working on. If the things that they're trying in those 50 stores work, you think they can roll them out to a larger subset of the
Possibly,
stores?
but I think the question I have is how relevant is the mall long term, and whether or not consumers like the department store shopping experience to the extent that they once did. You don't need to go to department stores to discover brands or to discover product. You discover it on your phone.